Well, new data shows home prices rose in 20 U.S. cities for the fourth straight month. And my next guest predicted the mortgage meltdown back in 2006. So does he see a turnaround, a real turnaround in the housing markets? He's Don Brownstein, Chief Executive Officer of Structured Portfolio Management in Stamford, Connecticut. Don, good to have you back with us on the program.
Always a pleasure.
Okay, so are you feeling, given these Case-Shiller numbers, given what we saw yesterday with existing home sales, are you feeling any more positive about the rebound in the housing market?
Well, I think that the housing market is definitely showing signs that it's bottomed. The national number was positive again. And actually, from my perspective, a little bit more interesting was the fact that cities in California and in Florida, Los Angeles, San Francisco, Miami, and Tampa actually did better than the national averages. So that's a good sign because they were the leaders on the way down, so to speak. And it's good to see them showing signs of being leaders on the way back up.
I mean, I'm glad Don brings up that point because this is a week where we're going to have a big shopping opportunity for people on Friday, Black Friday.
Yeah.
The Northeast, there's expectations you actually might see some pretty decent sales, but you think of those hard-hit markets like California, Las Vegas, et cetera, et cetera. If the value of your home isn't improving, then why do you want to go out and spend a lot of money?
Yeah, actually, though, California, I mean, Don, you've said before, as you were just mentioning, California is very key to watch. I mean, is it that the housing market can't completely recover? Or, I mean, what signs do you see in California that could tell you there's a national recovery on the way? Or is California going to be the last to recover because it got so hard hit?
Well, I think the key thing to remember is the fact that what we were in undoubtedly was a kind of a negative feedback loop with respect to housing prices, a disinflationary feedback loop. And to the extent that the tax credit program and some of the other things that we've been seeing, lower mortgage rates and so forth, have helped break that negative feedback loop, that's a positive sign because it means people are more likely to step in now than they would have been if they had seen housing prices continue to fall. I don't expect a really robust recovery, however. I think what we should expect is a return to some kind of normal rate of appreciation of houses in, perhaps the next year or so.
Yeah, recovery. I mean, you guys saw that report as well, J.P. Morgan saying that they don't see a housing recovery until 2011. That is 2 years from now.
Yeah, no, that's a long time. And Don, let me ask you, we're just looking at some pretty gnarly prices there over in California. Looking back to the U.S. here, I got a report last night from Elizabeth Stribling Associates, one of the premier sort of high-end places or brokers here in New York, and they're talking about prices down 30–40%, but sales are actually up 20 to 30%. In other words, if you discount the price, you're going to find a buyer. I mean, is that the good news, that you get the properties into stronger hands?
Well, I think there's some good news. By the way, I believe that the prices were gnarlier closer to the beach in California. The big thing, I believe, is that this be a very general recovery. And it's good to see it in such a big market as the California market.
Okay, Don, thanks so much for joining us. Don Brownstein, who's the Chief Executive Officer of Structured Portfolio Management.